You are now listening to Contractor Talk with Richie Kidwell, the voice for the people. Join Richie alongside co-host property damage attorney Hans Kennon as they bring light to the taboo world of big insurance companies, exposing their tactics and fighting for justice. Hear stories from contractors across the state. Contractor Talk, here to protect homeowners and uncover the truth.
Okay.
All right. Hey, and welcome to the show, Contractor Talk with Richie Kidwell, every Monday night, 7 p.m. to 8 p.m. here on 94.9 FM, 950 on the AM dial, The Answer. So we bring it to you live here in the Central Florida area, and then we also take it a podcast. So by Wednesday or Thursday of this week, you'll hear us on anywhere you like to stream, whether it be iTunes, Spotify, anything of that nature. And we're also on YouTube. If you're a YouTuber kind of situation, like us, subscribe us there, and you can then take advantage of Hans' dapper suit of the week. And we get a zoom in here there on his dapper suit of the week. Every week comes in
running a little late
flashy.
Today. I apologize. I was ready to leave and I didn't like my shirt. And I said, well, I got to make a decision. Am I going to be on time or like my shirt? And I had to go with like my shirt.
It's an obvious decision.
There you go.
Thank you.
Yeah,
you.
nice. Is that an E10?
It could be. It could be. Very nice. Very, very good call.
Or did he get in Eatonville? If you're here from Central Florida, then you'll love that one. All right. But always bringing you good stuff here on the show. And today is like none other. We've had him on the show before. Special guest for you here tonight, Sterling Scott. Then I almost said it just right. Perfect. Sterling Scott, Trust Public Adjusting Group here. And love to have you on the show, brother. How you doing tonight, man?
Thank you very much. Yeah, this has been asked to come back, and I appreciate every time I have the opportunity to be on the show. I like the fact that every time I'm on here, you never know quite where the conversation is going to go.
That's right.
But, been in the industry for over a decade. Yes, I have a public adjusting company. I also have an appraisal company. And so I basically do nothing but advocate for the insured. And you guys are on the same page of that. Mm-hmm. So I love to be here. Thanks again.
No, that's awesome, man. And I was telling you before we started the show, this is our topic tonight, man. I mean, it's the power of appraisal, and I want to make this our topic of the night. Not only do we have somebody that does this for a living here with Sterling Scott, and also in here with Hans Kennon as a board-certified attorney working in property cases to where there's a dispute. A lot of times, Hans, you can get it done without even filing suit.
Oh, yeah. I mean, in this current litigation climate, which is not good for litigation, in all honesty.
It's a dumpster fire. I love that you say not good.
Well,
it's a typical lawyer answer.
It's not the most positive venue. Just like the Division of Administrative Hearings is a bad venue for folks who have citizens insurance
That's
policies.
where I was going with this. 1/6 of the market is owned by citizens policies, which is crazy to me. 6.5 million HO3 policies here in Florida alone, and Citizens owns about 1 million of them, and so about 1/6 of those are owned by Citizens. And before 10 years ago, you would have to be at like your property in a zone where nobody wanted to insure you to even be able to get Citizens insurance. And
three times.
3 strikes, and then that's the only time you could go to it, to Citizens Insurance. And now it's like the first one presented to you when you're closing on your house. It's like, all right, what's the cheapest rate that I can get? It's like, okay, here you go, Citizens. It's also the insurer of they call it the insurer of last resort, but it's really of no resort because you get no coverage for it. You get no way to go after them from bad faith. It just doesn't exist.
But wait. The policy says under coverage A for dwelling that I have $500,000 worth of coverage.
Yeah,
Are you telling me I can't get to it? Is that what it is?
It's there, but just philosophically.
It's an illusion. That's what it is. It's an illusory contract.
Right.
When I do mediations with Citizens, the one adjuster always tells my client, now, Mr. Smith, you have $500,000 worth of coverage on your home. And I go, Bill, he can't get to it. He can't get to it unless the house burns to the ground. Like there's nothing left. Maybe then he gets the 500. Other than that, there's no way he gets the money.
Even then, it doesn't get anytime soon.
Interesting enough, I actually had a complete loss. There's a fire loss, right, and is insured by Citizens. This house was basically burnt to the ground, and Citizens was withholding the ordinance and law, which was approximately $125,000, and this amount of money was drastically important. And he had to bring his whole house up to code, including the slab and the brick structure that was there they were going to build off of. But they basically were saying, I don't care if you have a signed contract with a contractor, which typically is enough to release the quote-unquote cost incurred ordinance and law.
Right.
They're making us jump through all of these hoops to get this ordinance and law when they've already paid the policy limits, which we had to fight for, right? This is almost going on a year now. So we've got all of the policy limits, ALE, everything, which, again, wasn't easy. You'd think it would be, but it wasn't. But what's more disturbing is the fact that they're actually making us jump through all these hoops to get that last bit of ordinance and law when we've proven to them, given them documentation that we have to tear this down and we need the plumbing. This house was built in the 60s, and they're just not releasing it. We've given them almost everything you can imagine, and in the decade plus years I've been doing this, I've submitted half the documents needed to get the rest of that ordinance and law, and citizens are just like, whatever. And we've talked to attorneys, and the attorneys are like, well, we really can't do much to help you guys. We could do a deck action maybe, but by the time we take them to suit, and you would know better about this, Hans, it's like we're literally stuck trying repeatedly, almost repetitively, with the same documents, and they're just saying no. It's bizarre.
I mean, like Sterling mentioned, you could file what's known as a declaratory judgment action, which is ask the court to declare that the policy would require this sort of payment. The problem is it is a cost incurred coverage, and the case law is, in my view, is very, very clear that incurred is when a contract is signed. When you take on some legal obligation to pay it, that should be sufficient because it says $120,000, $150,000. What the insurance company says is spend it first, and we'll give it back. And most people go, wait. You want me to spend $150,000 that I may have no access to, so I can't rebuild my house because you won't give me the money that I'm owed until I spend the money, and you stop. Now, on certain things, under regular property, under coverage C, you got a pen, you got a watch, they make you buy. But this is talking about, like you said, six-figure payout that you had to pay out of your pocket before and even then, once you pay it, you got to give it to them and ask them.
Yeah, let's. Thank you for picking up on that, and I want to clarify that because I'm acting off of the assumption that a signed contract with a contractor is as good as incurred cost, right?
Yeah.
So as the case law has presented itself over the years,
my opinion, the case law says that once you sign it, and sometimes you say, well, it's not if it's a contingent contract, but if you sign a hard contract that says you got to do the work and I got to pay you, my opinion would be definitely under the case law that counts as incurred.
Right. And so ordinance and law, costs incurred, we have the contract. I even had a separate contract made from the contractor specifically delineating ordinance and law and the numbers are that they were and what specifically needed to be brought up to code. That's still, no, we have to see the money exchanged.
Right.
Which is like, are they making up their own rules? Like, what are they doing?
Yeah. No, a lot of that is simply, what are you going to do? Right. That's what citizens are saying all the time. They go, okay, what are you going to do about it?
Exactly.
Right. It literally is. It's a government-owned entity that is just you're not able to go after them. There's no recourse for a civil remedy notice. There's no bad faith that exists against them. They're immune from it. So what do you do, right? I mean, and this kind of leads into our topic on the overall. Out of the million policies that are out there, we have a big storm where there's a lot of claim volume, and you have all these citizens' policies out there. They're so horrible they can make you go to DOA, which is that administrative hearing, which as we've talked about before on the show, I believe it's like 97% or something like that in the favor of citizens. So the odds are not good to go to this. So what do you do? So we've had discussions about like what is their strategy to this? And so there is a broad segment in the law that says that if you invoke appraisal, then prior to them making a determination of I suppose the way I look at it, in my opinion, it looks at is if let's say Sterling, you get involved with the citizen's claim, and right off the rip, you say we invoke appraisal. They say, whoa, we haven't given any coverage determination yet. Give us some time to evaluate the claim. They send out their experts and such like that, and then 60 days later, they say, okay, we're going to decline this claim. You then, the homeowner then sends it to an attorney. Hans files a 10-day demand letter on behalf of the insured. then they automatically invoke this DOA, this administrative hearing, where there's 10 times out of 9.5 times out of 10 you're going to lose against Citizens, and then you're going to have to pay their fees and costs.
Yeah,
and so going to appraisal is what the safety net is here, and so there's discussion around when you can invoke it and when and to where it kind of saves you from going to DOA.
Right, and from what I've heard, DOA is like a kangaroo court.
Yeah.
But interestingly enough, and I'd like to have this discussion with you,
Sure.
circling back around to the appraisal process. So a little thinking outside the box with this particular claim that we're talking about, I decided to invoke appraisal on the ordinance and law, because the numbers are there, and even Citizens agrees that the numbers are there. So
I like where you're going.
Because I have an appraisal company and I have a lot of relationships with a lot of appraisers and umpires everywhere, it's like, will the opposing appraiser recognize the contracts that I've put forth to say, hey, this is cost incurred? So the power of appraisal, right? And we can get into the nit and gritty of what you were talking about, which is a broader, more accepted and reason why we have so many appraisals now, especially due to Citizens. But in this particular thing, we were thinking outside the box. If Citizens is doing this, we can't really do anything legally. Maybe we can invoke appraisal, appraise the ordinance and law only, give the opposing appraiser the documents the Citizens isn't recognizing, stamp it as cost incurred. Bye-bye, give us the money.
All right, and so my question is this though. I've never heard this, Hans. That to get ordinance and law, you have to incur it. I didn't think it was like really. So it's like
ALE.
That's where I was
but
going
if
with that.
ALE is appraised and recognized as costs incurred from, let's say,
like a
lease,
rental agreement. Yeah.
Yes.
Right. Going backwards, you could say, well, they can look at the lease and say, well, yeah, this has been incurred. They can do that going forward, and then the insurer can still, unfortunately, kind of, if it continues, ideally by the time you go to appraisal, everything's been done and complete. But I like Sterling's idea that basically it's a bit of a runaround where you get the appraiser and the award to say it. Problem is the award is subject to the policy conditions. So Citizens, look, the Citizens was doing the right thing. They would have paid it already.
Yes.
If you did it pursuant to appraisal, they still may say, well, we're waiting to see it incurred. They may not agree, because the appraisal award sets the amount of the loss. It does not apply deductibles, policy conditions, anything other than wear and tear and other things that would inherently be considered by the appraisers when determining an amount of the award. So it would certainly give you teeth to say, look, the appraiser agreed to this amount, the other appraiser and or the umpire agreed to that amount for cost for being incurred, but all they do is set the amount, and I think that's probably where I think there's more pressure with an appraisal award to pay it, and more ability to file a deck action and say, hey, look, here's an award, and then they're still saying no. Again, the cost of that litigation these days is depends who wants to bear it.
Now, can you file the deck action without the 10-day statutory notice to avoid the whole DOA invocation?
The thing is with DOA and Citizens, unless someone's heard something different, if Citizens, if they open coverage, they're good to go to appraisal. I've never had them deny appraisal once coverage is open.
But let's say you get the appraisal award that you want, but then they still stall on the payment, and then you're like, well, I'm going to take you to court. Can you file the deck action without filing a 10-day statutory notice?
Okay, that's like a law school exam question. I'm going back to school. Issue. Well, I mean, so let's see. I hate to say, I don't believe you can file any litigation in the absence of a 10-day demand letter. So I think you have to do that. But Citizens, to my understanding, is not sending any case where coverage is opened to DOA, unless someone's heard something different. They send all their denials to DOA to be heard. But if the coverage is open, you can demand appraisal. And Citizens, in my history with them, has been very agreeable to going to appraisal if coverage is opened.
Right, but would they pay it if let's say if Sterling gets this award and they award every penny of the ordinance and law, and then Citizen still says, okay, great, we're not going to pay it until you expend it.
Which they can do, because even though, again, I like the pressure of the award.
Yeah,
Again,
well, the award, if they delineate, hey, as appraisers, we recognize this as
Right.
we recognize this contract as costs incurred.
correct, and they can say that. Again, it just, there's not a lot of pressure you can put on citizens these days. But what you would do is
Agreed.
you'd say, look, the appraisers agreed that this amount is appropriate. They say, well, that only sets the amount of the loss. You still have to apply the policy condition. We say it hasn't been incurred. Again, I think that they're getting up to a steeper hill when you have that award in hand, and I think maybe they bow to the order to the award and say, well, let's just pay it. I'm just saying that the
So could they? Could you take the money that is given for the coverage A to the contractor to cover the ordinance and law upgrades, and then I don't know.
But the invoices have to reflect ordinance and law work. They can't just be you put a new foundation in, you bring the foundation up to code. You take a little foundation bill, you submit and go, okay, here we bought the foundation, it's up to code now. Give me my $30,000 back.
Well, and the sticky part about that is the contractor doesn't know what he's going to build, because there's $125,000 that he doesn't know what kind of design, what kind of upgrades, or not, upgrades, whatever you want to say.
Sure.
This versus that. So it's like, if we're going to go down this trail, we have to know the amount of money. And, this is a little over $500,000. With everything said and done, I think it's more like $650 approximately. So if you take $125,000 and say, contractors start working, it's like, well, I could go this way or that way depending on the $125,000, and because you aren't acting, you meaning the insurance company aren't acting appropriately, I don't have any security that you're going to give it, even when it's been spent.
Yeah, because the guy's gonna start building your house and go, you're good for the money, right? No, we're good. No. And then he does the foundation.
Citizens, we're covered.
And
we're fine.
But that's the problem. I think that Sterling's talking about is the builder would have understandably great trepidation if a quarter of the money or almost a third of the money is held by the insurer in some sort of ghost account where we don't know what they want in order to release it. He's supposed to build and get milestone payments only to do his next work, and they go, we didn't get the money yet.
Well, I mean, it's almost like working with a mortgage company. It's like they make you get to a certain point and then they release funds. They get to another point, you release funds. Maybe it's like that. I mean, can you do it in chunks? I mean, can there be an
agreement? The thing with the mortgage company, the money's there. Mm-hmm. We're talking about citizens going, we may give you the money if you comply. At least with the mortgage company, it's in the bank.
Right.
And where citizens are still waiting to get it for whatever. So again, you meet a milestone. Citizen says we don't think that's incurred. You tell the contractor, I don't have the money because they didn't give me, because they said it wasn't incurred or wasn't incurred right. Well, then it stops because the guy's got no more money. The builder's like, well, I'm not going to build anymore until you give me more money. Then you get a lien on the property, and then everything goes bad.
Well, that is worst case scenario. Best case scenario,
that
then
is my job.
Yes, it is. It is. Point out all the holes in the boat, and so it almost seems like it would need to be done, or an agreement to where it's like, just like you said, the slab is done. Okay, this is what we had to bring the slab up to 2 inches or 4 inches to meet the new flood codes or whatever it is. Right. And I think that's going to be clear in the Florida building code, but you shouldn't have to work that hard. It should all be right there. I mean, it just should kind of go seamless, especially if it's in contract. And I've heard it before. I know I've heard Hans say it before, that the case law does show that if you're in contract full scope, it's like funds that have already exchanged.
Exactly.
If it's within that scope. So,
but circling back around to the appraisal process, it's
which I like appraisal.
Yeah, it's a great alternative dispute resolution, which I think is exactly what it is actually. I had no intentions on having an appraisal company that does as many appraisals as it does now. I started it a year and a half ago or so, and it just so happened that Milton hit in the same year, and Citizens, which has 1/6 of the policies, is pushing everything towards appraisal. And what I will give my hat off to Citizens is the fact that they establish coverage but it's a little tiny bit, right? But we can talk trash on Citizens, whatever.
We do, and
But-
so and it's
but
straight
it's
from
worry.
it's straight from the paper too. If you saw it after Milton and Helene, they rejected 77% of all the claims filed in both of those storms. I don't know if you saw those headlines.
No, that's
So
crazy.
They were number one, and so the way that they would do it is that they would either deny the claim or pay it under deductible and say,
Yes.
oh, we recognize you have damages. Oh, but it's only a repair of your roof, falls under your hurricane deductible amount. So it's $6,000, but your deductible is $8,000. Ah, sorry, we can't help you. And so those folks then were getting screwed out of it. And if they don't know what they to do, where to go from there, that they can hire a public adjuster.
Yeah, a public adjuster. I mean, if it's a Citizens, it ends up in appraisal pretty much whether you hire an attorney or a public adjuster. And it just happened that I started the company in that same year where that's happening. However, what I was talking about earlier was Citizens at least establishing coverage, even if it's under deductible. It's sad that they establish coverage just so little, and it really beats up the homeowner mentally and everything else. However, when you're appraising something that has the coverage there, even if it's $100 on the siding and the paint and a little patchwork on the roof, a little mold, whatever it is, I mean, I can run with it in the appraisal process. And I'm closing out six figures in Citizens claims for pretty average sized homes, insured for $350,000 to $650,000. I'm taking, claims where the coverage was established, like you said, under deductible, really beating up the homeowner, and I'm getting $75,000, $100,000, $150,000 during the appraisal process. The appraisal process is also quicker. It's quicker than most of the time public adjusting. I remember public adjusting was 3 to 6 months almost every time. Now I'm looking more like 4 to 8. Whereas the appraisal process with the company SCC Appraisals, SCC stands for Sterling Claim Consultants. I'm closing these out 2 months, 3 months max. Some of them I'm closed out in less than a month. I don't go to the umpire that much. I try, sometimes it's a political game where you need to pull in the umpire. But, do we want to go into what the appraisal process is in this meeting? Do people know the whole process of hiring the umpire, who hires the appraiser, or are we just going straight into the importance of the appraisal?
I think the process is important.
Yeah, I mean, that's definitely important. And for the last 2 minutes before the break here, I do want to hit on a good point that we've talked about on the show. We talked about last week is that the deadline to file first notice of claim has just passed for Milton. However, if you were one of the victims of 77% of the folks that filed a claim and got paid under deductible, you didn't sign a release, they just gave you a letter to say that you were paid under deductible, is a good time to give Sterling a call, because I think 18 months to supplement, you still have some time left if you've already filed a claim, right? You have to have already filed a claim within the first 12 months for either Helene or for Milton. And at this point, you're saying that, Sterling, if somebody got like a low payment, that you could take them to appraisal, and the chances are excellent that you're going to be able to get them some sort of award more than what they got with this crappy letter that maybe Citizens gave them.
Yes. First and foremost, just give me a call, either Trust Public Adjusting Group or Sterling Claim Consultants, because depending on the carrier, depending on the coverage, depending on a lot of different circumstances, a public adjuster may be best, an attorney may be best, or an appraisal might be best.
And you'll do a free claim review, is that right?
Yes, free policy review, which is important with all the different policy exclusions these days. So free policy review, free property inspection, come out to your property so we'll know exactly how to strategize to fight your claim in the correct avenue.
Love it, love it. And how do we get a hold of you? Phone number, website?
Phone number is 850-708-2582. 850-708-2582. And you can visit my website at www.trustpublicadjusting.com.
Love it. Sterling Scott, Trust Public Adjusting Group is how you find them online. And just like you said, a free policy review, a free claim review. You never know if you're going to need the public adjuster to pitch it over to appraisal to be your representative, or over to a litigation attorney like Hans Kennon. So more today on this topic with the power of appraisal here with Contractor Talk. We'll be right back after the break. All right. We're back on live on 94.9 FM, 950 on the AM dial. The Answer. Contractor Talk with Richie Kidwell every Monday night right here, 7 p.m. to 8 p.m. And this week, I was actually talking ahead of time. So let me make a correction on the Hurricane Milton deadline is 10/9 or 10/10, depending on where you are in the state. So by the time you hear us on streaming, it will be the deadline. So today, right now, it is the 6th of October. And so you have a few more days left. If you think that you have damage at your home and you have not had it inspected since Hurricane Milton, you literally have 4 days, 3 to 4 days to have your home inspected, a claim filed, first notice of claim, and then there are 18 months total from the date of loss to file any supplements, meaning that after your claim is filed and then you turn in an estimate for damages, you have an additional 6 months from today to make those filings. But if you don't know what I'm talking about, hire a public adjuster or an attorney to review your policy and claim free of charge. And so, Sterling, we were just talking with you. Not only we're talking about our topic today, the power of appraisal, we just kind of wrapped up that last segment into just having a small window to file first notice of claim or have representation. And folks come to you all the time, right, that are in this process to where they're not satisfied with their insurance payout, what the insurance company was saying.
Let me jump in real quick.
Sure.
Under the statute, for claims resulting from hurricanes or other weather-related events, the date of loss is the date that the hurricane made landfall or other weather-related event is verified by the National Oceanic and Atmospheric Administration. So data loss is predetermined by the legislature, again, to be the date the hurricane made landfall.
In that state? So
NOAA,
so if it hits Florida and then hits North Carolina, those are two different dates of loss, right?
Yeah, sometimes it hits the East Coast before it hits the West Coast.
Right.
Right.
And again, not offering any
Right.
other value judgment other than the hurricane made landfall.
Awesome.
That's
It doesn't have a date next to that.
It does not. Because it does say date of loss. And date of loss, you go, well, maybe it was it could be a variety of days. If you're in Key West versus, again, East Coast, West Coast,
Right.
You know,
I know that the west side of Florida was 10/9, and there were some areas on your side of the coast, on the east side, that were 10/10 with their date of loss.
Right. We service the whole state, but on the East Coast, we're seeing the carriers constantly recognize 10/10. There's been a few 10/9s, but pretty much across the board, a few hundred claims, 10/10.
Right. So if your claim is filed and it says 10/10 on that paper that the insurance company sends you
That's
to
what I would
validate
go
that, that's what you would go off of. Good idea there. If you don't know, to be safe, I would go with 10/9. So you have a few days from today. If you're listening here in Central Florida, being today on October 6th, you have 3 days to make that determination.
Call Trust Public Adjusting Group. We're going to do free policy reviews and property inspections. It's worth it, especially since once that window is closed, SOL.
That's right. It really is. What
statute
number?
of limitations?
How do they that will close, the SOL will close the statute of limitations.
And what number? My bad.
There you go.
850-708-2582.
Awesome. And they can find you at trustpublicadjusting.com.
That's correct.
Awesome. Perfect. Yeah, some people like to go online. Then set up, did you have a way to set up an appointment online?
Yes, there's a whole form you can fill out, and it shoots
Love
it to
it.
3 different of my staff members 24/7. So
Awesome. And you said you handle the state, so it doesn't matter where they're at. If they think you have any types of damage, especially Hurricane Milton damage, they can call you and they can get an inspection in that window.
Correct. Yes.
Love it. Awesome.
One more thing, if I may. Hurricane Milton made landfall near Siesta Key on the evening of Wednesday, October 9, 2024, at approximately 8:30 p.m. EDT as a Category 3 hurricane. NOAA documented the storm, which rapidly intensified to a Category 5, affecting Florida's west coast with powerful winds. So,
West side. So now that is the question, right? So at 8:30, it goes through on one side, and if it affects the east coast of Florida, would that then be a separate date of loss? And I think
if the carrier, because the carrier is going to be recognizing it
right,
authoritatively, so it'd be hard-fetched for them to be like, oh, you did it on the 8th.
Right. No, I agree with Sterling here. If they give a letter that says 10/10 and you file a claim on 10/9, they're like, hey, you're late. You're like, whoa, wait. Again, your correspondence told me the date of loss.
Right. My neighbor has a letter that says 10/10.
Exactly.
Right. But you know how they are. We were just talking about citizens and how slidey they are in certain situations. And so to the point of where I made mention that one of another public adjuster's strategy that I've heard is that they get on a citizen's file and immediately, along with their LOR submission, they invoke appraisal right off the rip just to avoid DOA altogether. And just to say, no, we've already invoked appraisal. So if you open up coverage just a little bit, poquito, then we have already requested that we go to appraisal or mediation, alternatively of any type of resolution, such as DOA. Right now, that's on hold, from what I understand. While it's, I think it's going to Supreme Court. If I'm not.
There are two things.
I want to talk about that DOA because it was overturned, which is fantastic for us. But apparently, it's been overturned, but on pause.
There are two things going on that I'm aware of. I haven't checked it for about a week. Is that there was a restraining order put in place by a judge over in Pinellas County that basically found that it was either denial of access to courts or a variety of things along those lines. Mm-hmm. She then reaffirmed that when it was asked for her to reconsider. In the interim, also, my understanding is there's a class action, which I don't like that word because I don't think it really applies, but there's a lawsuit designated as a class action filed against citizens regarding the business practice of using DOA at all. Those are the two things that I know are going on.
Right.
Now, what I haven't heard yet, I have a client who has a denial from Citizens. I like the case, but I don't know if Citizens has actually, just because of how they are, if I do a notice of intent today, are they abiding by this restraining order? They're going to kick it in DOA and you got to go fight it there. I don't know what they're actually doing.
From what I understand, they can't. But I heard that attorneys aren't filing suit. They can. Now they can file suit. They do the 10-day demand letter. They can file suit. They just feel like Citizens are going to file a motion to stay. And then,
pending, right? Then you're
sitting on ice for 6 months.
Right, at least.
Yeah. Mm-hmm. So what do you do? I mean, my thought is I'm always gas pedal kind of guy. So I'd be like, load them up, just file a bunch of Citizens right now while that's on pause. And then if it goes our way, I'm super optimistic as well too. Then boom, you're months ahead of everybody else.
How is that right? So you can move forward with an attorney not knowing what the real projected path is. How do you commit yourself to litigation or signing or retaining an attorney when there's such a huge question mark on how it's going to prevail?
Well, and I agree with you, and I think that's why really no one's putting their toe in the water to file a bunch of lawsuits.
Right.
There's no one else really gassing and going, as you're suggesting, just because you do that, and then if it does go DOA's way, if the Supreme Court, because the guy who orchestrated the DOA, DOAH plan is a guy named Ricky Polston. Ricky was on the Florida Supreme Court until 2 years ago when he retired and joined Citizens as chief legal officer.
Yeah. Everybody knows he snuck that in there, though.
Oh, yeah.
And that it is an injustice to the people. I mean, by denying them access to the court system. I mean, this is ridiculous. So I don't see how they allow this to continue to go through. I mean, I think they're going to have to block it.
Well, and it's understandable, and certainly historically, back when Judge Barbara Perriente was Chief Justice some years ago.
Sounds very French.
There was
or maybe Italian.
I'm sure that involved a legal analysis at some point.
Yes.
But Judge Perriente wrote an opinion many years ago when they tried to do arbitration in PIP, and said that was an unlawful denial of access to court. So there's certainly precedent statutorily that you can't just force people into that type of thing where you are precluded from filing suit in a civil action for damages.
Right.
So it's a little technical, but we will see what happens with that.
Right. I mean, and you saw what happened with American Disintegrity. They filed that policy provision, and they actually got accepted by the Office of Insurance Not Regulating. And so they allowed this policy to come out. They just auto-renewed folks. It was in 2022, and the Restoration Association of Florida knows this because we filed suit on them, and we actually found it to be unconstitutional. And so to the point to where they backed it out. And so
Which part, Richie?
the binding arbitration part that American Disintegrity had in there. So, but then that's when Bob Ritchie, the guy that I don't like very much, he went out to all of his employees and illegally had them all cut a check to the governor the very next year while we're in litigation.
$1,000.
Wow.
Yeah, it's $1,000 each, and then he reimburses everybody through a bonus program, right? So then that way they can have all these hard funds, which is up to $1,000, which people really want. That's how they pay their operating costs. Soft funds are over $1,000. It's what they use for like hate mail against their opponents and such like that. There's a space for it, but they prefer having the up to $1,000 per person or entity. And so you can really load up these politicians, 1,000 here, 1,000 there, 1,000 there, and they really like that, so they will go your way. And so, anyways, long story short, then the governor decides who was on a rip between 2022 and 2023, as you know, changing laws everywhere, even to keep him as governor, even to not have to disclose all the money that he's spending, even after all of this stuff that he did by invoking all the rights away from homeowners. But in all of that mess, he codified it in statute to allow this binding arbitration to exist in insurance policies, but at least they put in there that you have to know about it, sign a rider, and take a discount in exchange for such. And so that's why I feel strongly now about that, is because that's the way, not only the law, but the way that it has to be, that the way that they saw that, and that's why they wrote it that way, is they said, okay, well, we can erode some of your previous coverages or whichever, as long as you acknowledge it and we give you a discount. We still have to offer you a policy that doesn't have binding arbitration, but here's this that does have binding arbitration. It's cheaper, right? So that's why you scratch your head now when you look at these ones that are like, these matching percentage things, or it's really the roof surface schedule one. Right. That's an illegal policy provision that is against the statute, and you're supposed to be paid out RCV, not this roof surface schedule thing. It's against the law, and it's not constitutional. So I don't see how that would stick out long around here before that's challenged.
The 1% is just outrageous.
Oh, the 1% matching?
Yes. It's just...
I did that today.
Right. And many people just don't understand how that should apply as well, too. Yeah. And it's kind of an unwritten rule that's just out there. Here's 1% matching, but the statute, I mean, we can talk about this too. The statute also precludes that you have to put it back to pre-loss condition. And so we'll talk about that after the break here. We'll get right back into it. The power of appraisal is also what we're talking about. We'll be right back. Contractor Talk with Richie Kidwell. All right. We're back live on Contractor Talk with Richie Kidwell, 94.9 FM, 950 on the AM dial. The Answer every Monday night right here, 7 p.m. to 8 p.m. Check us out on Spotify, iTunes, anywhere you like to stream here in a few days. Every weekly episode is uploaded in there in sequence, so you can check it out. You can also check us out on YouTube. Like us, subscribe us there. We're sponsored by the Restoration Association of Florida, a contracting association group by contractors for contractors. Check us out on raflorida.org. Great conversation today. We're just talking about the matching statute here in the state of Florida. There's a lot of confusion around it. What a good topic while we're talking about the power of appraisal tonight, because if you have not been satisfied with your claim payout and you haven't signed a full release, you can still call a public adjuster or an attorney to look at your claim to see if there's more meat on the bone. A lot of times the insurance company will just underpay you, see if you say anything, and then be like, are you going to say anything? And believe it or not, only 20% of the time that people actually do something about an underpayment or denial. And that's shocking, being about all the articles that we've seen over the past 6 months, talking about 6 months after the storms and then 1 year after the storm with these crazy denials. We're talking about 77% of all citizens' claims between those two storms last year were denied or paid under deductible. And then 14 other carriers, starting with People's Distrust all the way down to Snake Farm, All Snake. You're not in good hands. They're not a good neighbor. And you just need to understand they are not on your side. And so who is? Trust Public Adjusting, I know is. Hans Kennon here with Kennon Law Group. And these guys are advocates for you. And I think that's where you need to give it a shot. So if you haven't signed a full release, there's still time to take a look at it. And you still have 3 days from today to file any Hurricane Milton claim. 18 months total since the date of loss to supplement. But we're talking about this 1%. If you get yourself an appraisal, what's covered under the policy policy. But let's understand what that really means, because what's in policy, as Hans knows before, because he's litigated some of these cases where the policy provisions don't it conflicts with statute, where statute rules over policy. And I still scratch my head wondering how Office of Insurance Regulation just allows these things to come in there. Like I said, the roof surface schedule. That was a Senate bill that was killed a long time ago, back in 2021. It's like, why are insurance companies trying to run with this roof surface schedule when the law clearly says you're owed RCV on all of your materials? So if an RCV is replacement cost value, what it costs today, like you'll lose on a television that you bought 10 years ago because now the cost of televisions are so low, right? You can buy a 50-inch for $200-300 nowadays, right? But the cost of roof materials and labor continually goes up. So thereby you have to replace like with like, what it costs today. And so then these policies are coming out and putting these things in there, like these 1% matching clauses, and giving no money back to the consumer for this policy erosion. But let's understand 1%, right? The only time, in my opinion, that it should be used is in this case. It should be to where if there was there was a water loss on the lower cabinets, right? We're talking about the kitchen. And a lot of times these things come in discussion. If the lowers are all wet, right, you have to match them to the uppers. And your normal coverage A policies that have this RCV provision, your bottoms get wet, you have to match the top. So it's okay, it's a new kitchen and they have to match, right? Like kind, color, and material. That's what the statute says here in the state of Florida. So we've always went with that. In my opinion, that 1% should possibly, if it's going to apply anywhere, it would apply in this way, to where if the uppers got affected and the lowers didn't, or the lowers got affected and the uppers didn't, you would have then 1% of coverage A to then update the lowers to match the uppers and vice versa. And we're in this time or in a place to where the flooring got wet and all of the floor pieces are individually secured and glued in, right? Then at that point, if they're interlocking, now it's a whole different thing. They're interlocking, you functionally cannot repair that, right? So you have to take it all the way to the end on locking flooring. So what is your suggestion? I know you're chomping at the bit here. What are your thoughts on what should apply to 1%?
Okay, well, first of all, I think it's absolutely asinine. That's not a swear word because it's one word, but I know, we're on live. But here's why it's so important to have a policy review. Because correct me if I'm wrong. I mean, I don't sell policies, but if you're buying a policy that has a 1% matching, clause in it, you have to change it immediately, because the state statutes go against it, and it's unconstitutional, it's illegal, but somehow they're getting away with it, right? Matching is a lot of what it is to be whole.
Right.
Construction, the thickness of stucco, to bring it up to code, all these things are drastically important for what you're paying for in your policy. So if there's a 1% matching, you should know right now. So a free policy review is drastically important. Or call up your agent and say, hey, do I have RCV, which is replacement cost, what Richie did so well explaining thoroughly, but is there a 1%, or do I have the right to repair? There are all these things handcuff you.
Great questions. The right to repair is huge
and
too.
You can opt out of these things. Don't wait to look at your policy before it's too late, because you're leaving tens of thousands of dollars, sometimes hundreds of thousands of dollars, if you have these in your policy. So I don't know how hard it is to opt out of it, and I don't know what kind of savings you're going to get. I doubt it's going to come anywhere close to wishing you had the 1%, because it really does handicap you. It's like you shouldn't even have insurance if they abide by it.
Right. Well, I've heard them try to apply it to things such as like paint, or whichever, and it's like no. They're trying to apply it in incorrect areas, and that's what really burns me up, is that these and sometimes they'll get a great appraisal and the carrier says, oh well, it conflicts against a policy as 1%, so we're gonna constrict you to matching. So if we're gonna paint this wall, we're only gonna give you 1% to paint the other walls. And you're like, whoa. That's
another reason why I think it's important to really understand who you're picking for an appraiser. All right. I know appraisers all over the country, and some of them don't stay in tune to what's happening. And if you are in tune to what's happening with the policy and you have relationships with the umpire, it's like, look, this this policy has this 1% matching, or it has XYZ, they're not going to be able to get this. Maybe can we have a little bit more room over here? So if you hire the right appraiser, like Sterling Claim Consultants, an appraiser from that company, then the appraiser is going to be more aware. Because I know a lot of appraisers that, basically go in there and they're like, here's what's damaged, and then that's the end of it. But there's exclusions that they don't take into consideration, right? I do, and I think appraisers should.
Sure. And like you said, I mean, you want to get the same amount of the award. You might have to move the buckets around in order to get the money released, right?
You're supposed to go in there unbiased, right? But the bottom line is, it's like, if there's a huge discrepancy between my painting and the opposing appraiser's painting, maybe you can fare more towards my painting because of this exclusion over there. It's not like you're doing anything like, oh, they don't have that, so we need to do this over here, in terms of like making up for something in a bad way. It's like, look, my painting is still justifiable, even though his painting is still justifiable, but let's put this bucket over here to make it easier to counteract that.
Now, Hans, have you seen a definition specifically about this matching clause?
No, the matching clause arguably it comes from 626.9544.
626.9744 subsection B or 2.
9744. There you go. I was trying to think. I was like, which one is it? And that was interesting is that there's 3 or 4 sentences within that subsection. One of them says may, one of them says shall, and it says the insurance company shall consider the cost to ensure quality, styles, the color, all the things they say, and then
match like kind,
right,
like material,
like kind quality, essentially,
right.
And then may. So there's a shall sentence and a may sentence connected to the two. As a plaintiff, we always argue the shall consider, and they go, well, the second sentence is may make payment. So we did consider it because it's a shall, and we decided not to pay it because that's a may. So that's kind of
how about them apples.
So
that's how that
mother
statute,
may I?
That's how that statute normally gets interpreted. But they have to demonstrate if the insurer, which isn't that hard to do, to be honest with you, but if the insurer cannot demonstrate that they did in fact consider those things, then you might have them on that point. Because you'd say, well, in deposition, you'd say, now, sir, you realize you shall look at these things. Now, did you do that? Yeah. Well, how? Tell me how you did it. Tell me how you determined. Show me your like, kind, and quality. In your report, in your estimate, somewhere that says you did that work. If they fail to consider it, then that may put you back in the driver's seat as a plaintiff or the policyholder, going, well, you didn't do this, so you need to pay me. It's kind of what it comes down to.
Man, it's these things are so complex, and that's why you need a public adjuster in your life. We've said this before. Open up your phone. We give you great contacts here, from a tree guy to a plumber, an electrician, a drywall guy. I mean, who doesn't need a drywall guy? When you bump with with your chair, your elbow, or whatever, just small things to large, whether it be inspections. We've had roofers on the show, and in this case, a public adjuster. You need somebody to call to review your policy. Open up your phone and put this in there. I was going to say, plop this right in here. Sterling Trust Public Adjusting Group. Go for it.
850-708-2582. Sterling Scott Trust Public Adjusting Group. 850-708-2582. And to back up what you were saying, it's like most people, even contractors, right? Like, the insurance claim process is intricate. It's got legal verbiage, policies, has work been done, not been done, when can it be done? It's so complex. And, even a contractor should be getting public adjusters involved, because you shouldn't be hassled with fighting a claim and everything that has to do with it. As a contractor, you need to be out there getting more jobs. Why pay your staff to do what a public adjuster does and tie those people up in your company when they could be out finding the claims or, the jobs, whatever it may be. And then the public adjuster is the one that's going to take their entire focus of getting you the money. And as a contractor, you're not an expert in policy provisions and what needs to happen and using the software system that the insurance companies uses and the relationships that we've built with all of the people in the insurance company, outside the insurance company, the complexities of it all. As a contractor, you need to hire us or have, your client hire us, let alone the homeowner. And homeowners, if they filed a claim before, they know to go right to a public adjuster, or the right contractor who knows the public adjuster. But if a contractor's having an issue with it and should be guided to hire the right public adjuster, then how in the world is a homeowner or a property owner not? And my commercial claims, I've done 7-figure, almost 8-figure claims. Those are incredibly complex with the HOAs and the board members, the investors, and the switching out of the boards. And then you have all the tenants if it's a condominium building, or you have the business owners if it's a mall. I've dealt with all of that stuff. So there's no claim too big or too small for Trust Public Adjusting Group. I highly advise you to call us, whether you're a contractor or a property owner, commercial or residential.
Right. And I love your point to the contractor having a relationship with the public adjuster. So many times you've been in the kitchen of somebody to a homeowner trying to explain it, and you can just call the public adjuster, call Sterling, put them on speakerphone and say, listen, I don't know about policy, I know about contracting, but I know who does, and they make the introduction right away. You can almost nail it just from saying what insurance company it is. Oh, it's a commercial policy, it's Lloyd's, or it's whichever. You already have that experience, and that's what you bring to the table. So it's always good to have contractors with your phone number in their phone. And as well, Hans, thank you for being on the show.
Of course.
And we'll end the show there. Thank you, and we'll talk to you guys next week. See you.